Hey guys, this is a market update. We are preparing for our portfolios to go 10x, right? So Bitcoin going from 0.1% allocation worldwide to 1% of world assets worldwide. I think that's the base case. Many think it's more than that. Michael Saylor thinks it's 7%. I'll just say 1%, right? So a 10x in real purchasing power terms, over and above the growth of these other assets. A 10x for your portfolio. Yes, we can make quick money in other things, meme coins, layer one coins, I get that. But there's nothing with the risk profile of BTC. There's nothing that has the size and potential of BTC. Everything else is fighting a smaller battle and you take more risk there, which means you have to buy like 5 or 6 or 7 coins. Some of them do well, some of them don't. And then by the time you've actually got your returns there, is it going to outperform Bitcoin from a risk-adjusted standpoint? I don't think so, which is why I continue to focus on BTC. Another way to think about this is 1% of the world has a 10% allocation to Bitcoin. 99% of the world still has 0. There is a long way to go here, and the potential is staggering. And I just think that is the opportunity in crypto. And I understand you can make fast money in other things, but for most people, you've got a job, you've got a life, you've got a family that you need to support, and you need a strong foundation for that. And it is not trading meme coins. If you're 18 years old and you want to make some money, that's what you're in, right? But if you're anyone else who just wants a solid foundation, Bitcoin is the best risk-adjusted asset for me. So let's look at that in the short term, because over the short term, liquidity is starting to inflect to the upside, and that is a Bitcoin bull market. However, for right now, as you can see, for literally 220 days, the price has done nothing. That's why no one's interested in crypto right now. Very boring. That excitement isn't there. For almost a year, 2/3 of a year, we've literally gone nowhere. Bulls have been chopped up here. Bears have been chopped up, right? And we've just gone nowhere. We are waiting for something, which is the explosion in global liquidity. It is coming, but not yet. Everyone is so desperate for the bull market. Everyone's so desperate to make money. It's not going to come when you're desperate. But let's look at global liquidity actually expanding a little bit, or starting to, because that is the real bull market for BTC. We have another potentially 12 months of a bull market. Bitcoin doesn't move slowly. So it just goes nowhere and then suddenly it moves, and you have to be prepared for that, which is why waiting for that move to come is not the play in my opinion either. So if you do trade crypto and you haven't got a Bybit account yet, I trade on here. Click the link down below in the description. You can get up to 30,000 as a deposit bonus when you make a deposit on the platform. There are many ways to outperform Bitcoin during cycles, right? And there are many coins that will outperform it this cycle. There were many that outperformed it last cycle. But the risk you have to take in order to try to outperform, putting your whole portfolio into one altcoin, right, that outperforms, no one really does that. So then you buy 5 or 6. Most of them underperform and maybe one outperforms. But by the time you've averaged the returns there, maybe you outperform Bitcoin a little bit, but you've taken so much risk. And as they grow higher, I believe they get more risky because of what they are. They aren't worldwide digital capital. They're either smart contract platforms or something much more specific. And the valuations just don't add up there in terms of what they're worth, their user base. As they get more expensive, they actually get riskier. Whereas Bitcoin, as it gets more expensive, actually de-risks. I think it's the basis of any portfolio, let alone a crypto portfolio. Money, but that's not an asset. Bonds, they debase over time. You only use them if you've got short-term capital needs, or maybe you're retired and you just need the income. Real estate, you either own your own home or you don't. Equities, US dollar denominated, nothing really wrong with them. And then the rest is alternative assets. Bitcoin going from 0.1% to 1%. Right, that's the base case there. You've got a 10x with Bitcoin actually getting less risky as it grows. And so I just think this is still the play over and above everything else, annualizing at 50% a year. So we can see right here, we are still in a bull market, but certainly not topping out. A long way to go. It's just time to dollar cost average right here. It's not time to let anything go right now. We're still in the early stages here. We still have, I think, 12 months or so of a kind of expansion in liquidity and just a real bull market with debasement of currency. You can see here again, look, Bitcoin is actually outperforming everything and getting less risky over time. I just think it's the basis of any portfolio. If you're actually still here, you are part of the longer term investor base that actually is going to make returns. Short-term holders have been completely decimated at this point. You can see they come in at the top as the market kind of, it's too much FOMO at this point, right? Where as we go into a new all-time high, people love buying new all-time highs, and then they just get dumped on. And you can see short-term holders selling at lower prices than they initially purchased. So that is people knowing that the ETF got approved, coming in and saying, I want more BTC, and they push the price up to an all-time high. that is a bull market. You need to consistently buy at all-time highs. Like Saylor says, I'm going to be buying at the top forever because the asset is just monetizing, right? So it's going to continually be going higher. If you look at the moving average, it's continually going higher. So we're all buying higher prices all the time. It's just the way it is. There are going to have to be people that buy in at the top because a top in the price is those people coming in and pushing the price up because they want Bitcoin fast. But people that FOMO'd in there are now selling at a loss here, which is absolutely insane to me that they're actually FOMOing in here, but then selling at a loss 6 months later. It doesn't make much sense, especially with what's around the corner. Right, and as you can see here, money supply, global M2, global money supply, one of the metrics of it, right? And you've seen the Bitcoin price in orange, and this is global money supply potentially exploding higher as we have rate cuts in China, we have rate cuts in Europe, we have rate cuts in the US. I mean, it's all here. You just have to be patient for this to play out. This is important, the M2 money supply, because if you look at how Bitcoin reacts to this, it's massively correlated. This is from Lynn Alden. It's a great report here, so I'll try and link it below in the description. But essentially, directional alignment with global liquidity, which is money supply, credit creation from banks, right? Which is what governments want to happen right now, right? So you've got rate cuts and some sort of stimulus in certain areas of the world. They want banks to create credit. They want banks to debase the currency and push asset prices higher. In China, they're saying, buy back your stock in the equity market, push asset prices higher. Actually taking regulation out of the housing market so that more people buy. They want prices higher. They want debasement of currency. They want mortgages to be created. That's important because that spurs money creation. Money creation is money debasement. Asset prices go higher. Bitcoin has an 83.2 correlation to this. This is why people are excited right now. Even though we're chopping around and chopping short-term traders, this is really, really bullish for the next 12 months, in my opinion. 83.2% correlated. You can see the charts here as well. I mean, they're basically the same chart. Global M2 in orange, Bitcoin in blue. You can see as money supply gets contracted and actually contracts down, those are the bear markets for BTC, massive bear markets. So just to know when these are happening, right? When to know central banks are the key here short term. They drive they can have absolute control over asset prices higher and lower. So when they want money supply to contract, it will, and Bitcoin will go down. But for the most part, money supply increases and they want that. And as you can see, that is starting to happen again. That is this bull market unfolding. Are we going to get that for another 12 months? It looks likely, right? We are nowhere near a peak of the cutting cycle that's starting to come. So global M2 is going to increase over the next 12 months. That usually signals a pretty decent bull market for Bitcoin. So short-term, super bullish, not chopping around this 68 level or whatever. It doesn't matter, right? The next 12 months, if M2 starts to really inflect to the upside, which central banks want to happen, then that is the bull market for BTC. So patience for sure, but not just now as well. It's the next decade plus of Bitcoin going from 0.1 to 1%. And people who are fully allocated or highly allocated to Bitcoin, potentially like massive outperformers over the next decade. If you do trade crypto, check out the Bybit deposit down below. And if you are a crypto course member, an update is coming this autumn with a lot more in-depth research as well. You can check the details below if you're not a crypto course member yet. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.